You are good, you are kind.
Okay, so this is fixed asset register, and this is how it looks like. I believe everybody can see my screen. So this is how fixed asset register look like. It's going to have the name of the company and the year, fixed asset register, then information about the assets. What it really means is that it gives information, full details of assets that companies have. Maybe the name of the company, the name of the assets, the class of the assets, description of the assets. Then how many quantity are you talking about? Is it 2? Is it 3? Then physical location, where can you find the assets when you want to verify? Then the assets number. Then we also have the date you purchase the assets. We have the cost of the assets. We also have what type of depreciation method are you using? Is it reducing balance method? Is it straight line balance method? Is this straight line method? So it's also have that. Then apart from that, useful life. How many years do you want to depreciate these assets? It's also going to tell us the full detail about it. Then another thing is the previous depreciation you charge on that particular asset. So it's going to tell you the how much you have depreciated from the asset. Then this current year, what is the current year depreciation? Then by the time you had the two together, that is the previous you have been charging from the past plus the current year you are charging this year. So that will give us the accrued depreciation. And by the time we net the difference, the total depreciation from the cost of the asset, we are going to know what is the value of the asset that is remaining as at now. That's the net book value. Then how many years do we have left to depreciate this particular asset? It's also going to give you this as well. So I'm going to take few examples now. So I'm going to start from simple, or let's say simplest, before we start going to higher one. So let's call the name of this company House of Accountant. Okay, fine. So we are trying to say this one, the year end. Let's change this year end to 31st December. Because most of the companies, their year end is 31st December, so that it will be straightforward for us to understand. So the first one is building. So that is the name of the asset. So building. This is supposed to go up. Why is it supposed to come down? Okay, so what's the name of the assets? The assets we're talking about is land and building. But according to IFRS now, we have to separate land from building. So the building and land, you separate them. So let's call this first one land. Okay, if this is land, where does it located? Where can we find this land? Let me start with building. So let's call this one building. We'll talk about land later, because land is, we cannot depreciate land. So that's why I'm removing it from there. But let's look at the building. So this is building now. Then rates for the asset, because building will actually take enough time before it depreciates. So we are using 50 years, which is 2%. How do we get 2%? The rate actually determines the year. So you want to determine the rate is normally, it depends on the company anyway. So a company can decide, okay, we want to depreciate our building at 2%. We want to depreciate our building at 5%. So, but it's within that range for building. So let's assume we want to use 2% to depreciate our building. So how do we get it? That's 100 divided by 2, which is 2. I mean, which is 50. So that's how we got our 50 years. And that's why we have the 50 years here. This is why we have 50 years here as our year for the asset. So this is the rate, 2%. We are using 2% to depreciate our building. So what type of building are we talking about? This is the description now. So office building, if you like, you can put address, office building at 2 Avenue, Ikoyi. So that's where you can find the building you are talking about. How many buildings are you talking about? Is just one. And where can we find the assets, this building, which we have said before, physical location, that is office premises. If you go to office premises, you will see it there. Then what is asset number? If you can also generate number to your asset, so we can call this one 001. Then what date did you purchase this building? Let's say we purchased this building since 2020. So let's say 1st of January. Let's say it's 1st of January 2020. So that's when we purchased this building. Or let's call it this way, January 2020. So January 2020, let me just format the date so that we give us what we want. Okay, so it's going to be what happened to this? So please don't let us waste time on this. So it's going to be, this is 2020, let's say January. This is when you buy the asset. So from now to this point, let's say the cost of the building is let's say 15 million. We bought the building 15 million, or let's say 150 million. 150 million, that's the cost we bought the building in that 2020. So the straight line is this figure. And we have 50 years to depreciate this. So let's say from that previous year, if you calculate it, previous year, that will be this figure. This is on straight line. This figure divided by 50 years. So it means depreciation will be 3 million every year. So we put this 3 million here. We put this 3 million here. That's for the depreciation last year, because we bought this asset 2020 and this is 2021 account. So we must have depreciated this for 1 year, which is 3,000. So for that year, this one will also be the same thing. So it's going to be here. For previous year, it's not there. So by the time you move it forward, accrued depreciation will now be this plus this figure. making 3 million. So how do we get the balance now? It will be the cost you bought it minus accrued depreciation. The cost minus accrued depreciation, which gives us 147 million. So this one will be remaining how many years to depreciate? It's remaining 49 years to depreciate it. So this is the first one. This is first thing they must have done in 2020. Now, in 2021 now, there's no addition, but we are still talking about the same asset, which is land and building. So what do we do from here? This one must have gone for, because you are going to be doing this asset register, you'll be updating it every year. So this is what we have happened in 2020. So in 2021 now, what is the previous depreciation we have? That is 3 million. So what will be current depreciation? This is 3 million. And addition of the two will give us 144. I mean, will give us 6 million. So by the time we take away this total accrued depreciation from the cost, it's going to give us 144,000. Then the year now will remain what? It will remain 48. I believe that one is very clear. This one, this first example is based on previous depreciation, previous assets, not new asset, the existing asset, the one you have depreciated in the first year, or how many years we have depreciated it. So what we just do is to add the previous depreciation and then charge the same figure in the current year. Add it together, it will get 6 million. So since it's the same figure you are using, you'll be having the same depreciation value, except you change your policy. That's where you're going to have different figure. So since it's the same figure you are using, you're going to get the same thing all through. So let's talk about the new asset we just purchased now. So for example, let's say we have a building, a new building, which is addition. Let's say there's an addition, which is building. Okay, it's still also the same building. Someone is making noise there. Please make sure you mute your mic. Now, this building we are talking about is not the office building. Let's say it's warehouse, or let's say it's a factory. At the same, just put the address there. Let's put this one as a factory at Ikorodu. Factory at Ikorodu. So this is the new building we just have. And the building is just one building. Where can you get this? That's the factory premise. Because it's not in the office, it's factory premises, or let's say factory. So what is the asset number? We can call this one number 2 for building. This is our second building we have. And when do we purchase this building? Let's say we purchase this one in this year, because it has not been existing before. So let's say this one is in 1st January 2021. Something is wrong with this date, but I don't want to waste time on it. So let's just leave it for now. So this is, let me try to format it. Maybe it will work this time around. Let's use this method. So it's still the same thing. So something is wrong with that as well. So let's move on. Let's assume we buy this as this asset. Let's say we bought this one. Let's say we bought it 80 million. It's 80 million naira. Okay, fine. We are using the same straight line method. Our method has not changed, and we have to be consistent with the method we are using. So because it is 20 is a 2% on building, so we are still going to have 50 years to depreciate it as well. So this building now, how much is it going to be the depreciation? Now, because this is the first year we are doing it, there's no previous year depreciation, but we are going to have the current year depreciation. So we are going to say this 800 million. Okay, did I call it 800? We said we want to take it as 80. So let's call it 80 million. So we are going to say this 80 million we have divided by 50 years we want to depreciate it. So we are going to have 1.6 for every year as depreciation. So 1.6 as depreciation for this current year because it doesn't exist from previous year. So what will be the accum? Accum will still be the same method we have been using. Previous, which is not, which we don't have, plus the current we have now, is going to give us 1.6 as well. So we do the normal method, 80 million minus the accum depreciation. This will be the net book value that we are going to have in our financial statement for factory. Then how many years do we have to depreciate now? It's going to be 49 years remaining. This is remaining years. So that is on building. So let me take another example under motor vehicle now. So what is asset name? We said this asset is motor vehicle. Let's assume that this one has been existing before. So you are going to, the description of the asset, we are going to write it. So this is Toyota. You can say Toyota Camry. Toyota Camry. So let's call this one GE, then 123FG. So that is the number of the Toyota Camry. How many are we talking about? Let's call this one as 2. We are talking about 2 Toyota Camry, 2 vehicles. So where can we find it? Office site or office premises. When did you buy it? Okay, let's call this one because this is, let's call this one number 1 because this one is another asset, or we can call it number 3 to make it in a sequence way. So when did you buy this? So we said we bought it 18th of, so let's change this date to January, because I'm still trying to start from the beginning first, from foundation. So let's say we started January. So if we started this January, how much are we talking about? The 2 vehicle will cost us was 97 million 700 and, I mean 97,700,200. So that is the cost of the 2 Camry. Then what method are we using? We are using straight line method. Okay, what is the rates we are using? What is our known policy for depreciating our motor vehicle? We say it's 25%. So fine. So we say 100 divided by 25. That will give us 4 years. So it means we are going to depreciate this vehicle for 4 years. So fine, since we are depreciating it for 4 years, what are we going to do? We say this particular cost of the asset, which is this, divide it by 4 years, which is 24 million. So, which is 24 million. So what are we going to do? We come here and put the 24 million, which is the same figure here. But because this is the first time we are depreciating it, we said we bought it in 2021. So this figure will not have been here. So it's going to be 0. So we are depreciating it this year. So we are going to put the current year depreciation for this period. Or let me just copy this and put it here. So depreciation for the year. Depreciation for the year. So depreciation for the year. So our depreciation for the year will be this figure. We divided the total, the cost divided by 4 years, and we got this. So it's still going to be the same formula. previous plus current will give us the accrued depreciation. So take it away from the total cost. So if we take it away from the total cost, it's going to give us this particular amount, which is this. So how many years do we have left to depreciate this? We have 3 more years to depreciate, and that's fine. So now let me take another example on this one. So I'm going to take this one to be the same vehicle. Fine. The same motor vehicle. So let's call this one let's call this one bus. Toyota bus. Let's call it Toyota bus. Toyota bus. So let's call this one WY127, then HJ. So that's the number of the figure. How many are we talking about? One of the assets. So when can we find it? We find it also in the office premises. So what is the asset number? We can call this one number 4. But what is it going to change here? I want us to do something. Let's call this one 1. Let's say we buy this one in May 2021. We bought it in May 2021, not in January. So from here, how many months do we have to go? Okay, let's say we buy this one, let's say we buy it 20 million. Let's say we buy it 20 million. So we bought this one 20 million naira. Okay, fine. Straight line method is still the method we are using. So how long is it going to take us? It's still going to take us 4 years because we are using the same rates to depreciate, which is 25%. Okay, fine. What will now be the depreciation? This is where the trick you have to get now. Now, looking at this year, this date is not up to 12 months. This one is up to 12 months. That's why we use the whole figure here. That's why we didn't prorate. But now this one is not up to 12 months. So what do? We are going to prorate it. So we are going to say it's 4 years anyway. So we are going to say this 20 million, this figure, divided by how many? Divided by 4 years. Divided by 4 years. Then times, how many months are we talking about? We are talking about 5 months. I mean, we are talking about from May to December. How many months do we have there? We have 7 months, right? So 7 months. So it's going to be 7 divided by 12. So it's going to give us how much? It's going to give us 2.9. So it's going to give us 2.9. If you want to know the total value, it's supposed to be this divided by 4. It's supposed to be 5 million naira. But because it's not full year we are depreciating, so we have to prorate it to 7 months. If you remove these two figures and you put this one there as 12 to give us that particular 5 million. That is for the whole year, which is 1 year. But because we didn't start using the car, or we didn't buy it at the beginning of the year, and it's not up to 1 year we have been using it, so we are going to prorate it to 7 months. So we have 2.9. So we are going to come to the current year depreciation and put it here as 2.9. As 2.9. Then what are we going to have for accrued depreciation? We'll add it together and put it here. And what are we going to have for the net book value? Is still the same way. It will be the total the cost of the asset minus our accrued depreciation we have, and it's going to give us this. So how many years do we have more to go? 3 years. So it's not up to 3 years. So someone is raising hand, so let's answer that question very quickly. Please go ahead. You can answer you can ask your question.
Okay, good evening, Mr.
Good
James.
evening.
I think the from May to December, I think it's 8 months, not 7 months. 1st of May.
Okay. So 1st of May, 8 months. Okay. So
yes.
Okay, so just let's change it to. Since we have the formula, just come here, change it to 8, and it give us the figure we have. So we are going to have 3. So just copy it and paste it on the current year. So since you link the figures together, it's going to give you the answer straight away. So let's save this. So I believe this 2 parts is very clear. So that's how we continue to depreciate assets after one another. So let's take another one. Let's say office equipment. Under this office equipment, we have okay, we have one already. So let's use this laptop. Okay, before I leave that vehicle aspect, let's assume there's the disposal of assets. So I believe this first example is very clear, which is from two examples from buildings, and then 2 examples from motor vehicles. Okay, so let's look at it from here. Another motor vehicle now. Okay, let's call this one yes, it's still motor vehicle. So let's call this one bus. Let's use the same Toyota. RT 124 WR. That is the name of the asset, the name of the bus. So how many?
Mr. James, please, we can't see your screen.
Oh, sorry.
Thank you.
All right. But my screen is, I'm sharing it. Can anyone confirm, please?
You need to sign out and sign in back. Network.
Okay, I should stop
sign out and sign in back.
Okay.
No, not you. I mean the person that said it.
Okay, everyone can see my screen, right?
Yes, I can see it from my end, yeah.
Okay. Please, let's mute our mic. Let's mute our mic so that we enjoy the class. So motor vehicle, this is motor vehicle, and this is bus Toyota. So let's assume this is 1. And the same place we are going to see it is our office site. Someone is still making noise. If I get to know you, I will just remove you. Please, just mute your mic. So asset number, let's call this one 3. Now, instead of saying we bought this asset in 2021, I'm going to say this asset have been coming from 2020. So let's say it's coming from 2020. And we bought it then in January. So how much do we buy the asset then? Let's say we bought it 30 million naira. Let's say we bought it 30 million naira. Okay, fine. We are using straight line method on this as usual. So if it is straight line method, it means we use 4 years then. Now, previous depreciation must have been this 30 million divided by 4, which is 7.5, because it's on straight line method and we bought it in January 2020. So it means previously we have depreciated it once. We have depreciated it once, which is this figure. Now, I want to do something to make it more professional. This is supposed to come first. So I'm going to copy this and then put it here as number 1 so that I can explain. So because this is 2020, so we have to bring all the previous year first before we start adding the addition. So this is 7.5 million naira previous year. Now, for current year, because we dispose this asset in 2021, as of December 2021, we will not charge any depreciation on it again because it has been disposed of. So the current year will be, the accrued depreciation will be this figure plus this figure, which is 7.5. Then what will be the current value now? The net book value now will be this figure minus this accrued. So this is what we had in 2020. In 2020, when we did the account, and that's what we have done here. If you check financial statement in 2020, you are going to get 22.5 as the net book value of the assets. But something that happened in 2021 that we dispose of this particular asset. So we dispose it off in. So we didn't charge depreciation in this year because we have the information already that the asset has been disposed. So that's why I didn't put anything in the current year depreciation. So the same asset, the same motor vehicle. So this asset we bought in 2020 is the same asset we are talking about. So we put the number here. Where was the asset located before? It was in office site. So asset number is the same number of the first one, which is 3. Now, what year do we dispose it? We dispose it this year, which is 31st 12 2021. That's when we dispose it off. How much is the cost of the asset? The cost of the original cost of the asset was 30 million. And we remove it from there. We remove it from the cost, from the original cost. Then what value have we been using? We have been using straight line method to depreciate it. If that's the case, we've depreciated it for once. So it's still the same 4 year we are using because it's the same. This year is gotten using the rates, so which is always constant like that. Then what is the previous depreciation we have charged? We've charged previously 7.5 as our previous depreciation. So logically, if you add these two together, it's supposed to give you 0 because there's no more depreciation based on this asset. Then this one also, by the time you check it, this 30 is supposed to have been removed. So what you're supposed to have left now is only these two figures, which is 117, which is the total figure here. Now for current year, instead of you charging current depreciation, it will be 0 because the asset is no more in your premises. You sold it out. So what will now be the accrued? The accrued here will be the negative you have here. Because you have to remove it from the accrued as well. It's going to be what you have here. So by the time you remove it, you are going to get this figure, which means we are only recognizing these two assets now. This one has been sold off, and this is the depreciation charge so far. So you have to remove the net book value of that particular asset we are talking about too. And how are we going to get that? It's going to be this 30, which is the cost of the asset, minus this. So we can say 30 million. 30 million minus 7.5. So let me see if it's right. 30, 30, and then this. So it means these assets, which is this figure, so 22.5 million of net book value of the asset is no more, is not supposed to be in the financial statement again, because that asset has been disposed of. So the only thing we're supposed to have now is 89 million as our net book of our assets. So that is how that's how we calculate disposal. So by the time we treat it in the financial, how we pass the journal and everything, I believe it's going to be clear more. So if there's any question, let me see if it's very clear now, so that I can take one more example on disposal before we move on. So if it's very clear now, someone can just signify. If it's not clear, let me know before I move on from that disposal. Or I should take another example on that particular disposal. Okay, Ayodeji, you can ask a question.
Good evening, everyone. Thank you very much, Mr. G.
Okay, you're welcome, sir.
For giving my question.
Okay.
I've been observing when you put certain assets in negative, that on the, you are
when
putting,
I put what? When I put
the cost of disposal. I said the cost of disposal of
okay,
the
okay.
assets.
Okay.
When putting into negative, I'm observing that, can we create a column to show that this one is going out truly, that is no more in the asset, it is no more part of our asset, or it should be professional in this way? That's the first question I want to ask. If it is create one for the cost of disposal and the figure there, or we should really put it like this to make it professional? That's question number one. The question number two, sir.
Okay.
The assets that you mentioned, that when you are talking about that the asset was purchased.
Okay. I'm with you.
The cost of acquisition of that, the date of acquisition is May 2020.
Okay. 2021.
Am I right?
Which
May
one
2020.
No.
You said the bus was purchased.
You mean disposal, right?
Hello, sir.
Is it disposal?
No, I mean the cost of the day of acquisition, date of acquisition. I mean for the bus.
Okay.
I think it's on
the one of 20 million, right?
No.
The one we are disposing.
Okay, you have used January 2020. Yes. Perfectly. That's perfect. That's perfect. So in the current depreciation, which is current depreciation, you know that the asset was bought in January. So 31st December of 2020 is just a full year.
Okay.
So the asset is being depreciated that year. That is 2020.
Okay.
So you now said that the asset was being disposed of in 2021.
Yes.
Using this, using December 2021, I think there should be another depreciation as to that regard.
Okay, thank you.
Yes, sir.
Okay. So let me take that question. Okay, another person ask question. Ask your question that I can answer the question together. Another person is raising hand. I can't see the screen. Please. Okay, that one will be. Please take disposal again, please. Okay. All right. So any other question before I answer the question that we can treat it together?
The 25%. How did you get the 25% for the motor vehicle and 50% for building?
Okay. The 25. This rate we are using. This rate we are using is based on company's policy. You can mute your mic if, so that we can. So this rate we are using is based on company policy. Some company may say, okay, we want to depreciate our building on 2%. We want to depreciate our building, our motor vehicle 25%. But the rate should not be more than this. This should be the standard. That's why there's capital allowance. The capital allowance rate is a standard rate. Is from tax. So this is the, for vehicle, this is the percentage you must use. For building, this is percentage you must use. But companies have different rates they use in depreciating their own asset. So we are assuming that we depreciate our own motor vehicle on 25%. That's the question. That's the answer for that question. Now, based on putting it separately.
Sorry, sir. Doesn't mean that some companies may decide to use 20%, right?
Yes. Yes, you can decide to use it. See, if you can, some companies will say, okay, our motor vehicle will use 5 years before we sold it. Some companies will say, no, this is our vehicle, it cannot use more than 3 years. Some companies say we cannot use our vehicle more than 4 years. So that's their own policy. And that will determine, that will based on the percentage you are going to use. But the common rates, these are the rates I'm using here. So 25% and 2% for building as well. Then for disposal, you can actually leave your disposal like this for it to be more detailed. So that when you are looking for any asset that you have disposed, you'll be able to trace it back that in 2021, this particular asset is here, then the same thing went out of this place. So instead of saying you want to put it in another way, you can just put it in a negative way. By the time you put it this way, it will automatically net off this one. So it means 30 plus 30 minus net 30 will give you 0. So it means that asset is no more there. So any person, any new accountant or new person coming in and he saw, he handled this fixed assets register, there will not even be need for him asking question or whatever. We know that this is what happened at the end of that particular year. So based on this one you said, so we are going to change this one to 1 year. We are going to change this one to January. Let's change this one to January. Let's change this one to January, so that we will not bother to depreciate it again in that particular year. So that I'll make it one simple. But we can still do another one that will make it to depreciate it in that particular year and then later dispose it of. So maybe that will be the next example we are going to do. But based on this now, let's assume that we bought that particular asset in 2020, January 2020, then we dispose it off in January 2021. So I believe that one has been answered now. So because of our time, let's go to the next example. So let's leave this motor vehicle now. Let's assume we have another one, which is office equipment and is laptop. Let's assume it's laptop. Laptops, they said they want to depreciate it on 20% for their own laptop. And the name of the laptop is HP laptop 4 gig. So that's the name of the laptop. They said is 2. Fine. Where can we find it? We find it in the MD's office. And history, let's say is 1. Or let's say this is a 6 in our, then when did we get this particular HP laptop? Let's say we bought it last year, the same day we bought this. which is this figure. The same day we bought it. Then how much is the cost of the asset? Let's say the cost of the two laptop is let's say is 100 million. Can it be 100 million? Let's use a realistic figure, a realistic figure. So let's say is 500,000 for the two laptops. So we depreciated it in straight line method. How many years is it going to take us? Because we are using 20%, that will be 100 divided by 20, which is 5. So fine, we say it's 5 years we are going to depreciate it. If that be the case, so what will be the previous year depreciation? From our calculation, it means it will be this 500 divided by 5. So 100,000 in a year. So it means they must have depreciated, they must have recognized 100,000 last year as depreciation. So this asset is still exists. So this year too, it will be 100,000 because it's still existing. We are yet to sell it. So what will be the addition of our accrued depreciation? Will be this. Okay, let's make this one more. So let's say we buy this one in 2019. So it means we depreciate it for 5 years, which is 100,000 per year. So it means for that 2 years in 2019, 100,000, in 2020, 100,000, making 200,000. So it means we have depreciated for 200. We have depreciated twice, which is 200,000. Then current year now will be 100,000. If you add the previous plus this current, it becomes 300,000 we have depreciated. How much do we have left? That's 500 minus this accrued depreciation so far. So balance of that asset in our account will remain 200,000. How many years do we have left to go? We have just 2 years to go. We have depreciated for 3 years now, 2 and 1 this year. So that is for that. Now, let's say there's another one. I want to be fast now. It's still the same formula. Then this is air condition. HPLG. That's the name of the asset. How many? Just one. So where can we find the asset? You can find it in account department. And let's call this one number 6. Now we bought this asset in 1st of August. We bought this asset 1st of August. 1st of August 2020, or let's say 2020. 1st of August. Now the asset was 200,000 and we use straight line method to depreciate it. So fine, we are going to use 5 years as well. So how much will be the depreciation? It will be 200 divided by 5. That's 40,000 every month. I mean every year. So 40,000 every year. But based on this asset in 2020, they won't depreciate it fully. They will only depreciate it for how many months? That would be August, September, October, November, December, for only 4 months. So what are we going to do? We use the same formula. This figure divided by 5 divided by 5 years that is going to take, then times 4 divided by 2. by 12. So this is what they must have used in that particular year for depreciation value. So this will be the previous depreciation they have used. 1, 2, 3. That's the previous depreciation. Now, current year depreciation now, because it was in 2020, so current year depreciation, they are going to use the full depreciation, which is going to be 40,000. If you divide it, if you divide 20, if you divide 200 divided by 5, so we have 40,000 for this year. So if you add the two together, it's going to give you 53,000. And if you take it away from the cost, it's going to give you this particular figure. So this one will remain how many years? It will remain 3 years to go. So let's now assume that this last asset was disposed let's assume it was disposed in 2021. I will still need to adjust this year. Let me adjust this year to 2019. This is 2019 now. So you will also come here. I'm just trying to make more simple question make it more complex as well. So for if it was bought in 2020, this is what will have been our answer. But now we are assuming that it was bought in 2019. So it means in 2019, we will charge 13,333. Then plus another 40,000 for full years in 2020. So this will have been our figure as our previous depreciation at the end of 2020. So in 2021 now, we charge this figure again, making this figure. So this is the value of the assets remaining. Now let's assume now that this particular asset was sold off in 2021. So the same asset was disposed of. The same assets was disposed of. And then the one in account department is the same thing we're talking about. So it's still the same 7 we are talking about. Now this asset was disposed of on 12/2021. So how much is the total cost of this asset? Is 200,000. It's 200,000. What method have we been using? We have been using straight line method. So how many years do we use to depreciate it? We use 5 years as our normal method. So what is the total depreciation we have charged so far? Now, based on the question, it has the other time. So from 2019 and from 2020, that was full year. Now we have to charge it this year as well, because this is the asset was used till December 31st December 2021. So we are going to pick the total depreciation charge for the year, which is 93. That's what we are going to remove from here. Then we put this one in negative to show that we have removed this. We show this one in negative to show that we have removed this. So for current year depreciation, what is current year depreciation here? Is 40, so which has to be removed as well. It has to be removed, and the figure, the balance figure will be 100,000 here. Then for this one also, the accum depreciation supposed to be 3. So this one also has to be removed from the accum depreciation. So what we have left is 300. So from there, what will now be the cost of the assets minus 93. So what we do is 200,000 for the cost of the assets minus 93,333. So this one will remain one. Okay, it's correct. So this one, we put it in negative. We give you a negative. So by the time we check it together, it's going to give you the same figure. So it means when you check your office equipment, the net book value now will now be 200,000, not when you added this one. Now, I will explain why we have to remove it from here. Now, this is your fixed asset register. And whatever figure you have here must tally with what you have in the financial statement. So if this is what we have now, we are going to add this figure under building plus this figure under motor vehicle plus this figure under office equipment. So this will be the total net book value that will be showing in the financial statement. And this will be what you are going to have under accrued depreciation. That is the total accrued for each of the assets. Then this figure will be for depreciation charge for the year. And this will be the figure we're supposed to have in our P or L account. Then for this one, this will be the total figure you're supposed to have before you charge this current year depreciation. Because this is previous year. This will be the previous year. This is 32. Then this will be the previous year. There's no previous year because this one has been removed. And this is just the 3 million. So we are right. So 3.1. Then the total cost of assets now, if you check your asset register, I mean your financial statement, the cost is supposed to be 348. That's supposed to be the cost you have there because the asset to dispose must have been removed from that particular place. So that would be the simple way of calculating a fixed asset register. If we have enough time, I will have opened financial statement for you and see. Let me see if I can do that within 5 or 10 minutes. Let me try if I can do that within few minutes. Let me see. Just to open a financial statement for you and see what I'm trying to talk about or what I'm trying to explain, where we are going to show it in the financial statement. So let me try to open one financial statement for you. Okay. Just a minute. I'm trying to open one financial statement for you. Okay, I found one. So still opening. So if you have any question, you can be asking the question now. We just finish everything once we are done with this. If there's any question, you can ask. So I'm trying to open it because it's a bit heavy Excel. So it's going to take some time before it opens. So, okay. So it's open. Okay, so let me try to share. Let me try to share. So I believe everybody can see my screen. Excel is not opening, so somehow every, let's see how long it's going to take to open.
Disposal, even though they have no impact, even though the disposal does not have impact on the asset schedule. Now we are talking about the presentation. For example, able to clean out the asset schedule. If that same asset that you cited in your illustration is disposed at a particular place, I'm looking at, fine, where are we looking at it? Are we looking at it from the, obviously we are looking at it from the P&L and the statement of cash flow. That's one.
Okay. Is that all?
Yes, yes.
Okay. When you dispose assets, it's going to affect your cash flow because you have to remove it from your cash flow. No, that will be under investing activities. So under investing activities, there's going to be addition for the assets, then the depreciation, disposal of the assets. So you're going to go to your cash flow and also you add it back there. Then the new assets you purchase, you remove because the money is going out. You bought the asset, so definitely money is going out. So it will be in jacket, but this one you dispose because the money there's inflow when you sold the asset. It's going to be in the positive side. Then also it's going to affect your P&L because you must know, when you sold the asset, there's going to be income in it. So you are going to recognize the income. Then the accrued depreciation that has been coming, there's the accrued depreciation that has been coming on that particular asset. So you also have to remove it from that particular financial statement. So is the net that you are going to pay tax on. Tax on the capital gain tax, because you have the cost of the asset was 20,000, and you have depreciated it for like you have depreciated 15,000 out of 20,000. So cost of the asset minus accrued depreciation and the cost of selling that asset, maybe it's 5,000, or let's say it's 2,000. So 20,000 minus 15 minus 2, that's profit you are going to have, which is 3,000. That's what you are going to pay your tax on, and that's what you are going to report as your income on disposal, profit on disposal. I don't know, maybe that is clear now.
Then another, I'm fine. Another question: how do we use asset schedule that we have prepared? How do we consider monthly decrease in our books in the income statement?
Okay.
So is that our concern is majorly on the yearly basis. And are we going to divide each of the depreciation by 12 and take as in we prorate it, then you take the one that belongs to each month to the respective income statement?
Okay. It's only the current year you are going to recognize in your income statement. Because the one you have charged previously, you must have recognized it in that particular year. So it's only what to charge this year. That's what you are going to recognize in your financial statement. That's why we call it depreciation for the year. So I'm going to share the material with you. So I'm trying to share that now. Okay. So it's only this depreciation charge for the year you are going to recognize in your financial statement. That is this one, depreciation charge for the year. So this is the only one you are going to recognize in your financial statement. So what are you going to do here now? What you're going to do is this 3 million depreciation charge for the year, you will debit it and put it in expenses. That's depreciation charge for the year. Then this particular one, 3 million, you credit your accrued depreciation. So the journal way now will be depreciation charge for the year. Then accrued depreciation. So let's assume this is 3 million. Then you credit accrue 3 million. So this is how you continue to charge it. This is debit and this is credit. So that's how you continue to recognize it yearly. So by the time
what about the monthly depreciation?
Yes, exactly. So monthly depreciation, that's what you'll be recognizing every year. So by the time this amount, at the end of the 5 year now, let's say we are looking at this one now. So at the end of five year, you see that this accrued depreciation will be 150 million we have. Will be 150 million we have. How do we get that? Because you must have done this depreciation charge for the whole 50 years. And 50 years times, you must have done depreciation for 50 years because it's going to take you 50 years. So 50 years times 3 million. So it's going to give you that 150 million. So at the end of the year, you are going to, at the end of that 50 years, you are going to have 150 million in your account. So by that time, your depreciation will be reading 0. So it means you have fully depreciated the asset in your financial statement. Does it make sense now?
Thank you very much, sir.
Okay, sir. Don't worry, we can have another day to do the posting. Maybe next month we can just make sure you know the asset registered now. Maybe next month we can do the journal entry for all the assets we have done today. Okay, Ayodeji, you can ask your question, please. Ask your question, please.
Okay, thank you very much, sir, once again.
All right, sir.
So when you are explaining the cash flow statement the other time,
Okay.
just the one you just explained now, that
Okay.
the assets being disposed of should in activities.
Okay. Yes.
Am I with you, sir?
Yes, you are right. That's it.
Okay, if we are to remove it from the investing activities,
Okay.
to treat it as part of the other comprehensive I mean, under the profit or loss accounts, the assets being disposed of. That's one of the questions. The second one is that the being disposed of, you said we are going to charge gain on it.
We are going to charge what?
But in capital gain,
Okay, yes.
you mentioned capital gain the other time, sir.
Yes, capital gain tax.
Okay, under taxation, that is, we are going to charge. Okay, if you are going to charge, or if you are going to put it under capital gain, the outpost of it only happen like the one you just explained now, that 150,000 minus 2,000, something like that.
Okay. The question is not clear yet.
The cost of the asset, if you remove it from the asset is being, I believe that one should not be attracted to capital gain tax.
No, there's
That's
nothing, just forget about capital gain tax now. Just make sure you understand the fixed asset register. We can take another time to explain capital gain tax. Okay. So if you want to calculate capital gain tax, is just a different topic. So I just try to explain, if you want to calculate capital gain tax, there are some items you are going to look at. There are factors in calculating capital gain tax. You look at the cost of that particular asset when you bought it. You look at what is the accrued depreciation so far on the particular asset. Then you look at the cost on selling that particular asset, maybe transportation from your office to that particular place. So those are the items you are going to remove from there to get your net, to get the value of the asset you want to sell. You don't know how much did I sell. You say what?
Okay. To arrive at either we have capital gain or we have
profit or
loss.
Exactly.
Yes.
Gain or loss, yes. So, but that is another topic entirely. That's not what I'm talking about.
Okay, sir.
But if you want to,
you said next time you make the journal entry for all the one we have treated, sir.
Yes, because of
Hello,
time.
Sir.
Because of time, we are going to look at the how to pass journal maybe next month.
Okay, I'll be very happy to be part of that.
Make sure you understand the register we have done today. It's somehow simple. So for that investing activity, you will see it here. I believe everybody can see my screen. So this is proceed from disposal of fixed assets, and this is purchase of fixed assets. This is cash flow statement you are seeing here. So if you see it, you will see the items here. It's always here. So you deduct the purchase, and then you leave the dispose open as a positive one. So that's just it. So some people are still raising their hands. Ask your question very quickly before we, please go ahead and ask your question, please. What is the difference between assets, fixed asset schedule and register? They are the same thing. So you can use it interchangeably. So it's still the same thing you are talking about when you are talking about. So there's no difference between the two. Is there another question? Some people are still raising their hands. Don't worry, we will do the journal later, maybe next month. How to pass the journal. So let's wait for like 2 minutes. If there's no question, you can call it a day.
Hello.
Okay, good evening, sir.
Good evening, everyone. Thank you very much, sir.
Okay.
Hello.
All right.
Am I on?
Yes, I'm with you.
Thank you. I'm sorry. I'll take you back from where you started, sir.
Okay.
Though I'm very clear with what you have done so far is and order.
Okay.
To that disposer, the motor vehicle net book value. I want you to cursor on it. I want calculation is like that is where I got it wrong.
Disposal of the motor vehicle, right? This is motor vehicle here.
Yes, I can't see it. Ah, shit.
Can you see the screen? Can you see my screen?
I can't see your screen again, sir.
Okay, it's not showing.
Okay, don't worry. Let me reshare it.
It's not showing. It's not showing, sir.
I'm seeing it. I'm seeing it.
Okay. Okay, so ask your question now.
Bullshit.
Can you see it now?
I just want you to place the cursor on it. Yes, I can see it. Please just place the cursor. I want to see the formula bar. I want to see how it show, how it look, please.
Okay, is it the one
when you
of
have
the
22.5?
22.5.
When you have 22.5 million, the disposal, the disposal.
Okay, I'm coming. Let me see what you're talking about.
Yes, at the right time. Yes.
Okay, this one, right?
Yes, this. Yes.
Okay.
Yes. Okay, let me see. I want to see the formula bar. Okay, let me see. Oh, okay. Okay. Thank you very much. That's what I want to get.
Total
Okay.
cost minus the depreciation, accrued depreciation. So are we good now?
Yes.
Okay, so this is where we're going to stop for tonight.
Okay.
You can rewatch the video, and I will send this material to you on your mail, so you can have it. You can check your mail, and you get it right from there. So thank you very much.
Sir.
All right, you're welcome.
Thank you very much, sir.
You're welcome, Ma. Okay.
Thank you.
Yes, sir.